good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi, and the bulls are completely in charge today. That's how the mood of the market is. We are less than 40 points away from the live high level. As far as that 20,000 mark is concerned, live high level, of course, we already are at that. But that 20,000 pin code that we have been talking about is less than 40 points away. A lot of participants today. It's, of course, Reliance, which is up around 1.5% on the adjusted basis. That's sitting at record high levels. ITC, that one has pumped up almost 2% higher. Again, a record high level for that one. And ICICI Bank too is participating today. In fact, these three stocks are the top, gainers as far as the contributors are concerned at the index level. What is not doing all right? That's IT. That's clearly on the back foot today ahead of Infosys results. That stock is tanking a bit. However, pharma and banking stocks, they are rallying quite a bit. So there's no problem area coming in from pharma as well as banking names. If you look at the pharma sector, there's Natco Pharma, Gland Pharma, Glenmark, Dr. Reddy's, Sun Pharma. They're all inching higher, and even Kotak Bank, that was in a complete slumber of late. That's managed to perk up around 3%, and ICICI Bank, the numbers are this Saturday. Ahead of that, maybe the street is expecting a lot because we are seeing a gain of 2.5%, and then SBI, Axis Bank. So a lot of participants as far as this party is concerned. Less than 30 points away. That's what I was, glued to for the Nifty. And I think in the August series, the Nifty has already hit that 20,000 mark. So we are just about getting there. Yes, and today we've done it bereft of participation from, like Anisha was mentioning, an Infosys, which is weighing heavy ahead of its numbers today. HCL Technologies, L&T, M&M, Tata Motors, they're all flat, and the Nifty has done it alone. So ITC, Kotak Bank, ICICI Bank, which is charged up 2% higher as we speak right now. And, the good thing is that sectoral rotation has been taking place almost on a daily basis. We've been talking about as to how the PSBs have come to the fore. It's no different today. Look at SBI. That's actually, contributing a fair bit to today's Nifty move. That stock as well holding higher by about almost 2%. But I think more than anything, it's the pace of the rally which has been staggering and mesmerizing, so to speak. I think if we managed to clock 20,000 today, it would have been just around 15 odd sessions from the last peak to now. So that's the kind of pace of rally that you're seeing right now. But anyway, counting down to 20K, we're almost already there, as unbelievable and magical as it may sound. So before we talk individual stocks, let me quickly get on board Kunal as well as Nuresh and talk about what they're making of the market. Kunal, I don't think the question is if. The question is today, tomorrow, next week.
Next hour.
Next hour, yeah.
So we were discussing a 100-point average run rate for the index last 2 days back. 19,800 we scaled, I think, yesterday, day before. Today we scaled 19,900. And hopefully by the end of the day or maybe start of tomorrow, we should be at 20,000 mark. But again, I think it's been a spectacular session today because, most of the names which you mentioned are, the stocks which have been actually underperformers. Axis Bank, ICICI Bank, they've been underperformers at large as compared to the previous moves we've seen, for these stocks participating, as well as compared to the other peers. HDFC Bank is nowhere close to its life high. Reliance is the demerger price. So I think that's also going to now a special hit. So on the back of all of this, for the index to move up higher on the back of constituents, large cap names, pharma stocks, FMCG names, ITC, etc. participating, I think it's just good to see that the markets are so broad-based and not too much dependent on just few large cap names.
Nuresh, hi, afternoon. Not whether or not we're going to hit 20K, because in the August and September series, the Nifty's already managed to clock that mark. But if you want to participate now in this rally, what are the stocks that you would go long on?
So it would be the same in the large caps, like I've been saying, SBI, ICICI, which have come closer to new all-time highs. We've hit a new all-time high on ICICI. For the last 2 days, good momentum. SBI is still yet to hit a new all-time high. So that's the one which could take leadership next. And apart from that, autos still look interesting. Hero MotoCorp, for example, after the current dip, is at an interesting stage. Same is the case with Ashok Leyland, which is near to breakout. So for now, banks could be the next one, which is where SBI comes into place, as well as ICICI. And today, after a really long time, it is Kotak Mahindra Bank, which is trying to come back, make a comeback. If that can sustain about 2,000, that should be the one which could take leadership. So banks could be the next one, apart from Reliance.
Banks could be the next one apart from Reliance, but a solid rally underway. And just to think of it, that we were waiting for that all-time high level on the Nifty just a couple of weeks ago, and that had quite a bit of hide and seek that it played. But just it's been 15 sessions that we have managed to go from 19,000 to 20,000, and that's the big thing to watch out for. We're already at 19,963. Sensex, of course, at record high. The Bank Nifty is closing in at that 46,200 mark as far as Bank Nifty is concerned. So a lot of momentum, and mid-cap already at record high, though it's underperforming today. Just wanted to highlight that it's Reliance, which has been up almost 14% in the last, 1,000-point rally that we have seen. Infosys has seen quite a bit of perk up, and other IT names as well. Tech Mahindra, Wipro, they have also participated in the last leg of rally, and now perhaps it's the time of the banking index also to participate. But the one that is participating today and is leading from the front is ITC. That one is up over 2% in the trading session, and this is a big corporate news break that we have for you. It's an ET Now exclusive. We learned from reliable sources that ITC is all set to announce the demerger of the hotel business soon, mostly before its AGM, which is lined up next month itself. Remember, this was the big trigger for the stock. This is not the first time we are hearing about it. It's been going on for over a year, and the management has been saying that they're looking at alternate structures to value unlock the hotel business. Now the news flow is that it can happen soon, very soon indeed, because the AGM is mid of next month, and the announcement can come even before that. Let's find out more details on the story. Vinny is joining us with all of that.
So absolutely, what we have been hearing always is about the demerger of the hotel business of ITC, and now we are expecting that announcement to be made as soon as in the next month. This is what we are picking up from our sources, that the likely announcement is expected to be made ahead of the AGM, and that is going to be on 12th of August 2023. Currently, obviously, the hotel business contributes to around 4% of the SOTP valuation in terms of the overall ITC valuation. And let's not forget, ITC overall also has been focusing a lot on increasing that asset light strategy. So it works in place, to demerge the hotel business and get some value unlocking over there as well. Brokerages as of now are valuing that hotel business at 20,000 to 25,000 crores as well. Currently, in terms of when you look at the hotel business over the last decade, has contributed around 5% of ITC's revenue and EBIT, while it's the second largest hotel after IHCL. When you see, and EBITDA margins of ITC in terms of the hotel business is almost at par with IHCL as well. Currently, they have 11,500 rooms across 120 plus hotels, and 70 locations is what they're spread at. We have always had that commentary coming in from Sanjeev Puri as well, time and again, and July 2022 is the first time when they spoke about the demerger of hotel business again, and they said that it's very much on the table again. And to an interview to ET Now exclusively, Sanjeev Puri also highlighted that alternate structure of the hotel business is on the table. Annual report 2 is highlighting similar commentary, that they're committed to that asset light model and structure of this, and obviously creating revenue streams and alternate structures for strong industries is something that they would look at. So now we could expect this demerger of the hotel business, given that the market currently is trading at an all-time high. We are seeing that it's an opportune time to make this divestment as well, and hotels as a sector has seen a sharp recovery post the pandemic and has recovered very strongly. So right time is what they feel could be coming in for ITC's hotel demerger, and this is what we're picking up from the sources that we could see is as early as in the month of August.
Okay, Vinny, we'll leave it at that. In case for the viewers who are just joining in, we understand from our ET Now exclusive sources that ITC is expected to announce a demerger of its hotel business soon, and the announcement should come in the next month ahead of the AGM, which is slated for August 12th, next month itself. Sandeep Sabharwal too joins in on the show right now. Sandeep, I think right time as any if ITC is looking at the hotel business demerger. Okay, we seem to have snapped that line. Just going to get back to Sandeep Sabharwal and get a check from him soon. But ITC, by the way, has now perked up. In fact, it's sitting at the high point of the day. And Kunal, this has got to be the story of, I think, the last year and a half, right? ITC and the way it's moved from strength to strength.
Well, yes, and I think no stopping for the stock. I actually believe that possibly 400, 450 strong psychological marks, which should act as an impediment for the stock price. But I think it's no stopping for the stock. Even in the last, I think, 3 or 4 days, the stock has just accelerated towards the 490, 495 mark where it's trading right now. It's now coming very close to that 500 mark. So hopefully, if you manage to break out the 500 mark for ITC, we can expect another 10% upside for the stock. And I think that's been the hallmark for the stock price, the change of behavior, change of trend. The moment the stock had found its mojo back in second half of 2022 or in the mid of 2022, from there it's not looked back. We've hardly seen any major multi-month retracement for ITC over the last, I think, 16 months, 12, 14 months or so for itself. So phenomenal comeback for ITC in this 1.5 year.
Sure, let's see if we have Sandeep back because we'd love to hear his view as far as ITC is concerned. Sandeep, I hope you heard the story that my colleague Vinny was breaking. Of course, it's been in the works for a while, but what's your sense? Hotels demerger and the other parts of the business?
So I think, frankly, actually, all these restructuring and all demergers, mergers don't excite me so much. So I think it has to be the value of the total company. Now, it is possible that a demerged entity gets a better value because of the fact that hotels in general are getting valued more than their cigarettes business. So some value accretion can happen, but it's a small part of their overall value. Like if you look at the total value of ITC at 6 lakh crores, hotels would account for maybe 25-30,000 crores at the outset. So today's move itself would have increased its market cap by, I think if you see 3% up, then 15,000 crores. I think this is more or less factored in. Fundamentally, ITC has been doing well. It's got re-rated. I think that re-rating has reached a level now. I think it will be more to do with earnings growth rather than further re-rating.
Point, because the market cap, as you pointed out, is already past 6 lakh. The value of the hotel business is pegged between 20 to 30,000. So yes, a large part of that move is what we saw already today. But nonetheless, that stock is soaring away, whether you call it value unlocking or any other trigger. But since we are on the subject of value unlocking, let's welcome on board Jalirani as well, because he's joining us to talk to us about Reliance as well, because that's been the big unlocking that we have seen. Remember, at the start of the trading session, we had seen that RIL was in the pre-open session trading at 2580, and the value that was derived for the Jio Financial Services business was around 260 rupees. Large part of the street was expecting that the valuation will be between 160 to 190 rupees, but the actual value derived was around 261, much better than what the street was expecting. Sandeep, your take on Reliance itself, and if at all, anything on financial services if you have to add?
So Reliance had underperformed for a very long period of time, and after that, over the last 2-3 months, we've seen it come back and outperform and make up for the underperformance for this period. I frankly think that it's ridiculous to give a valuation of 260 rupees per share for Jio Financial Services, which actually is doing nothing right now. Like they're doing some things, but hardly anything. And I think it's looking too much into the future. Overall, Reliance per se should do reasonably well. So, but again, I think as far as the large caps go and the indices go, my view was that we'll hit two thresholds this year, 19,000 and 20,000, which I think is more or less done. I don't think we are getting 21,000 this year. Let's see.
Don't know about 21,000, but 20,000 is just about 30 odd points away. Should make it today or tomorrow, hopefully. On that note, we're going to take a very quick break. When we come back, we'll continue our chat with Sandeep Sabharwal as well as our charters. Back to closing trades right here, ET now, counting down to 20,000, 40 points away from that for the Nifty futures in this series. We've already scaled that mark in the August and September series, by the way. And in the spot Nifty, we're just a few odd points. Actually, no, retraced a little bit, about 50 points away now as we speak. But yes, the sectoral churn continues to be at play. It's actually some of the underperformers. I mean, one of the biggest mover on the index today is Kotak Bank, and that from within the private banking space has actually been quite the underperformer. You've got pharmaceutical, which has got the maximum sectoral contribution today. So the likes of a DRL, Cipla, Sun Pharma, they are the ones which are sitting high. ITC, of course, is looking very smart. Bharti, ICICI Bank, Axis and SBI as well doing their bit. But Sandeep, just wanted to understand, in the last 15, 16 odd sessions, is there any addition that you've made to your portfolio? Any stock that you've added positions to perhaps?
In such spiraling markets, it's tough to buy into new stocks. So Just holding on to the portfolios, we are more or less fully invested. On the banking side, we have Axis and ICICI Bank as big holdings. On the auto side, we have Tata Motors and Mahindra and Mahindra, L&T on the infra side, and Bharti Airtel, and so on. So, Sun Pharma on the pharmaceutical side, especially talking about the large caps. So, holding on to a fully invested portfolio, my view is that market should be fine, decently placed till around September, and we could get some correction end of the year. Around September, we'll be looking to generate some cash.
September is the time when you're looking to deploy some cash. Thank you, Sandeep, for joining us. But let's move on and talk about the big boy Reliance, because that's seen a big value unlocking today. Of course, Reliance Industries is trading at around 2,618 rupees, but you also have the demerged entity, which is trading at 260 thereabouts, or at least a discovered price. It's not trading, it's a constant price, but it's at around 261 thereabouts, much higher than what Street was expecting. We have with us Mr. Jal Durrani, the Executive Director, Nuvama Institutional Equities, joining us in the show to talk to us about Reliance. Hi, Mr. Durrani, good afternoon. Thank you so much for making time and speaking with us. What's your sense with respect to Reliance going forward? Q1 is not expected to be the most bumper quarter for the company, but the stock is already sitting at record highs. How are you viewing the risk reward now?
Well, the Reliance stock sort of over the years tends to be a steady performer. And it's got many engines that it is firing on, in addition to at least one new engine, which is the new energy space. So barring the near-term speculation and volatility that has taken place on the back of the Jio Financial demerger, and which now is behind us, given that the two entities are trading separately, I would say it's business as usual. And I would think that steady performance for the stock should continue.
Make of this demerger, the value unlocked for Jio Financial Services, did you had a similar value pegged for that business?
No, we had a valuation of up to 180 rupees a share. It has exceeded that. It's one will have to see if the current stock price sustains. But really, the business that Reliance is really starting off a completely new business, and it's essentially very consumer facing. We similarly saw in the retail business that it took Reliance as much as 14-15 years to actually start making profits in this business. And here in this business as well, they're targeting the retail market, small businesses. Of course, the platform is going to be significantly different. They're banking on a digital transformation to reach out to 1.4 billion Indians, so to speak. But really, it's a very long haul business, and to attribute a premium to such a business so quickly is premature. If you recall, in fact, in the Jio digital business, for a very long time during the gestation period, the market was giving a significant discount on the invested value. So I would say that it's premature to give a significant premium to the stock price, to fundamental valuations at the moment.
Sure, get that point. Jal, many in the market are also ascribing a premium to Reliance because they believe that with this demerger now, it's also sort of precursor to the very long impending the telecom arm and the retail demerger as well. Could that be next, or it's a little premature to think that it's going to follow anytime soon?
Well, to be honest, that's anybody's guess. That's something which is being talked about since a long time. But is it imminent? I'm not too sure. These businesses have certainly reached a degree of maturity. So while to some extent they're still dependent on the cash flows of the O2C business, they're not entirely dependent anymore. So we'll have to wait and watch, but can't say whether that's imminent or not.
It's surprising to me, and I'm curious to hear your views on that. They haven't gone ahead and demerged the mature businesses, telecom and retail, but they have managed to demerge financial services, which does not have any, standard business per se to talk about. Yesterday, they released, of course, the financials as well. Wasn't anything to command a market cap of 1.7 lakh crore rupees. Your sense why the company would have demerged the financial services business first and not the retail and telecom arm?
I think the financial services business requires a significant balance sheet size straight away, and to that extent, they by transferring the treasury shares of Reliance Industries to this business to give that critical mass to the balance sheet, and hence kickstart this business was the strategy here, which they have sort of leveraged. So that's I think the unique strategy they followed for this.
I don't know, Jal, if you're authorized really to comment on this or not, but now with the demerged entity, how is it that you're pegging a target price in Reliance?
Well, we shall be relooking at our target price, but very simplistically, the intrinsic value which we had attributed towards the treasury shares is something that we shall strip out, is simplistically what I can guide you at the moment.
And anything specific that you're watching out for from the earnings tomorrow?
So, overall, we think that the earnings are going to be flattish. But there are going to be many moving parts to that. And essentially, the largest of the moving parts is the refining business, where they had a record high refining margins the previous quarter, which has come off dramatically. So, essentially any number over and above expectations in this largest business, which has been very volatile, could swing the numbers for the entire company in either direction. So that's something I would be watching out for.
Okay, Jal, great to have you on the show. Thank you so much for taking the time out and speaking with us. Okay, let's revisit where Reliance is currently at. That stock will just come up for you on your screens post the demerger of financial services, Jio Financial Services. That is, shall be numbers as well on your screens. Just the top line figure as of now, a 17% uptick on a year-on-year basis, stock holding up about 3 points or so. But let's get in some closing strategies as well. Half an hour to go, and it seems like it's going to be a bit of a wait before we hit that 20K mark. So we've retraced a little bit from the peak of the day. Kunal, what are your closing ideas?
So that'll be Hero MotoCorp. I would believe that the auto stocks after a 1 week of consolidation could make a good comeback. So I think 3,040 odd levels for Hero MotoCorp looks attractive for a contra buy from current levels.
Right. Naresh, what about your ideas?
So that would be a buy on Grasim, finally trying to cross that 1800 mark, has been attempting it for quite some time. So keeping our stop loss at 1790 and expecting some follow-up action over the next few sessions.
Hero, these are top bets that our chartists are making. But last 30 minutes of the trading session, of course, it's the day of the weekly options expiry as well. So that will come into picture over the next 30 minutes. But we'll take a quick breather before that. Welcome back. Less than 30 points away, and we've been saying that since the start of the trading session itself. But let's see finally when do we hit that mark. Let's discuss all of that and more about the markets with Jay Bala. Of course, he's joining us from cashthechaos.com. Jay, is that what exactly you're looking to do, cashing this chaos?
That's right. The markets have been pretty belligerent on the upside for the last 1 month. So, a lot of the broad markets and has been outperforming than the frontline indices. So there are a lot of opportunities in the market.
So where do you think is it? Do you see more rally to this up move that we are seeing? Do you see 20,000 happening? That's just 20 points away actually. Do you see, let's say, 21,000 on the cards now? What about Bank Nifty? Which are the sectors you think are the best placed?
See, I had projected a level of 20,500 on the 26th of May, but I was expecting that to happen sometime around Diwali. So October, November, that was the time frame. But the markets have been faster and quicker than anticipated. So that is a positive and a negative. Positive because that shows a lot of bullishness, but negative because the markets are overstretched and overdoing it, and it breeds a lot of excess optimism. So that's the reason why it's a negative. But the banking index is slightly different. I look at the markets from a long-term technical perspective. A lot of technical resistance for the banking index come in at about 47,000, starting from the 2005 levels of for the banking index. That resistance line, what I'm talking about, has been putting brakes on the banking rally in 2008, 2018, 19, 20, and that's going to get hit sometime around 2023 around the 47,000 mark. So there is a little bit of caution required in the banking index. But, at the moment, we got to assess what the character of the next pullback is going to be. That's going to be absolutely crucial. If it's going to be shallow, then it's very bullish. If it's not shallow, then we're going to reassess the whole market.
Okay, so watching out for that pullback, whether it's a shallow or a deep one, because that will define the next leg of the rally. But Jaybal, if I had to ask you about the best tactical or positional trade right now, what would that be?
See, the strongest have been the autos and FMCG and the capital goods name. At the moment, FMCG is still firing on all cylinders, but there is some slowdown in capital goods and autos. It's just a slowdown, not a reversal. So the best place to be you should be looking at these three sectors and pick laggards which are breaking out at the moment. So if you look at something like GE Power India, GPIL, that's been a laggard within the capital goods space, and it's trying to break out. So a stock like that might make more sense. And focus on the broad markets where there are no leverages. So something like Saregama, which is on the small mid cap side, but it's not got derivatives leverage. So that kind of focus should be what you should be looking at the moment.
So the broader market themes, small cap names like Saregama, etc., which are not leverage plays, but within the large caps itself, just wanted your view about, let's say Reliance, ITC, as well as Kotak Mahindra Bank, because these are fairly charged up today.
Yeah, Reliance, because of the demerger,
Sure.
we you need a little bit of time for it to, complete its move and see what's happening. But, it's come exactly off the all-time high. It's just 15 paise just below the all-time high, and it's pulling back. So that is need to be let aside for the moment. ITC, it's still momentum is completely strong, very strong. Like I said before, the FMCG space is the strongest. So as long as ITC holds 460, 440, I think that uptrend should still continue. But when it comes to Kotak Mahindra, that's been a little bit of a laggard, and it's not in such a great place. But the fact that it's come up above 1920, that's a short-term positive for it. But I expect the stock to not proceed much higher, face stiff resistance around the 2020 mark.
Okay, so that's the take coming in. Just hold that thought, Jay. We are less than 15 points away. In fact, now 13 points away from that 20,000 mark. So you don't want to miss this. But I also want to bring in other panel of guests as well. Of course, Naresh Mirani, Kunal Bothra, as well as Vineet Bulanjkar are there with us on the show. Naresh, your sense as far as the market is concerned right now, what would be your trade? Would you still look at buying this at around 19,986 for the Nifty?
It would still be a hold rather than a buy because we are at overbought zones on the index. It's just that the constituents are not overbought. We are seeing Reliance Industries on an adjusted basis has hit a new all-time high. We are seeing that is just 1% higher than maybe the all-time highs. ICICI Bank, SBI, everything is just closer to all-time highs. So the index is overbought, but the constituents are not. So time to just ride on to the moves.
Take coming in 18 points away from that all-time high level. Kunal, your best trades?
From a BTST perspective, or
from any perspective, what is the best trade if you had to take something?
hold longs. I mean, still
At Nifty Bank, which indices, which stocks?
whichever
Whatever,
stocks
just buy
you just
something.
you have to be long. You can't be staying out. So I've seen so many people actually staying out, waiting for some dip, some correction to buy the stocks. I mean, and that's not happened in this kind of a bull market. And I think one of the classical features of this bull market, which I would probably categorize, is that a classical the health of your portfolio matters significantly, because it's not that all sectors have participated full throttle at every leg of the bull market. So if your portfolio is well diversified enough, you would have probably gained substantially right from the start of this bull market till right now, and even in every phase of the bull market, whether it's autos, in the infra stocks doing pretty well, pharma, FMCG, banking, private sector, PSU banking stocks, etc. So I think it's a great mix of portfolio which could probably have done or outperformed rather than a skewed portfolio towards one sector.
Jaybala, I think the message from Kunal here in the studio is pretty long. Go long on anything and everything. What's your long list looking like?
No, I've had all my long list, something like, I've been focusing on the mid cap and the small cap space, something like Electric, which I picked up a few weeks ago. It's ran up 35-40%. So, I would say this bullish, but I won't say, you should be long on everything. But definitely, you got to pick up, look at sector rotations and stock rotations. Look at laggards, because that's what bull market does. It picks up the laggards and tries to equal the performance and level the field. So now, what has been a laggard? Keep looking at that, and allocation should be sensible here. The markets are very stretched, and the optimism is running high. So that's the only negative for the market.
The optimism is definitely running high. Street doesn't want to take into notice any negatives right now. Jay, we'll let you go on that note. Thank you so much for joining us today. But let's take this conversation to Vineet Bulinshkar as well. Vineet, what's your take as far as the market is concerned? Do you think it's time to be a bit cautious, as Jay was pointing out, or you're in the camp what Kunal was saying, just go long and buy something?
Said that, like Nure said that, the constituents are not overvalued. So let me give you a few numbers. If you look at the PEG ratios of a few HDFC and ICICI Bank, they're at 0.85. SBI is at 0.3. Bharti Airtel is at 0.3. Maruti is 0.5. Axis is 0.4. Sun Pharma is at 0.5. Bob is 0.2. So if you see all the index components, they are extremely undervalued. And so I believe that the index has got substantial uplegs to do, despite being, as people would call it, overbought. So I believe that, it's the time for the large caps to move. And we've already seen fireworks in mid cap and the small cap. But what has been happening is that the mid cap and the small cap have got huge earnings growth, and re-rating of multiples also taking place. So the A group, or the large cap, were getting ignored. But they can't be ignored any longer. And I believe that these stocks which I mentioned to you are going to be the outperformers in the Nifty going ahead.
Right, 19,986, that's where we're currently at. Kunal, I just wanted to get in a sense, I don't know if you have a metric to quantify that or not, but are participation levels also at an all-time peak?
No, that's exactly the point which I was highlighting, that you have to stay long. I mean, I'm not saying that you create any long positions over here, but so that was not the point which was implied. But I meant was that you can't be sitting out of this market, and at least large cap names and the ones where you have more higher degree of conviction, or at least there is some sort of safety which is attached to these large cap stocks. I think that's the pocket which I think one should start trading into, rather than sitting out, waiting for that correction, waiting for that drop in stock prices. You have to start participating on the upside, because at best what you've got is just a 200-point consolidation. We've not even gone through a 500 or a 700-point correction on the index in this last, I think, 1,000-1,500 points for the index. So that itself tells you the health of the market, that we are in no mood of going to any kind of a correction, price-wise at least, but more of time-wise.
Okay, so that's the take coming in. In fact, we are expecting numbers from a couple of companies. But before we get to the previews, I want your view, Vineet, when it comes to Polycab and the entire cables and consumer durable space. Polycab has set the entire sector on fire. Will you still be a buyer?
Absolutely. And, it's been a fantastic numbers from Polycab. And they're looking at expanding their presence in the B2B space. They've identified almost 150 white spaces which they want to populate. So the growth numbers will continue to come, and obviously power is going to be, we are going to double our power capacity in the next 7 years. And if you're going to do that, obviously the growth rate for the industry is going to be very large. And for the incumbents, it's going to be a disproportionate higher growth number that will be there. So I believe that as they start as the market gets more organized, Polycab and the other listed players will keep gaining market share from the unorganized sector. So I believe that these are the segments to buy into.
Okay, let's also try and find out what the expectation is from Unilever as well as Infosys. And firstly, Infosys, Anisha, what are you penciling in?
Well, I'm expecting that the growth is going to be close to 1%. Of course, the street is very divided. There's, part of the street which expects there's going to be a decline of 1% in constant currency to this. Let's put it up to Infosys now, please, because we're talking about that and not HUL. And the growth is expected to be as much as 1% as far as Infosys is concerned. But the street believes in terms of dollar revenue, we are expecting a number of $4,561 million, which means a growth of around 0.8%. The margin is expected to remain flat quarter on quarter. We are not expecting a big move. Maybe 20.9% is what we have penciled in. Last quarter, this number was 21%. Not expecting an impact of wage hike, etc. this time. So fairly flattish at that. The profitability is also expected to remain around that 6,150 mark. Again, the range is very wide, right from 5,800 all the way to 6,300 as far as profitability is concerned. So that's fairly wide. What the street wants to know is whether the guidance will be maintained or not. 4 to 7% is what they had said last quarter. The street is expecting it will be narrowed to 4 to 6%, and the EBITDA margin guidance for around 22 to 22%. What will also be important is the management commentary on deal wins, because in order to even achieve this 4 to 7% growth, the company and the management needs to bag in more orders, because there have been a few ramp downs and a few cancellations that had happened. So they need to make up for all of that. Plus, there have been many senior level exits. So not only attrition as a whole, but those senior level exits is something which has the street worried a bit. So all of these factors is something that we'll try and decode with the management. Of course, 4:30 is when the press conference is, and we'll get all of these questions answered then as well. But then there's another press conference this afternoon or this evening, and that's HUL at 4:15. So we'll get a plethora of numbers towards the end of the trading session or post that. But what are the expectations from HUL? Let's go across to Vinny to understand all of that.
Absolutely. So in terms of the FMCG major, what we're expecting in revenue growth and 8% revenue growth, margins are seeing a bit of an expansion there of 80 basis point. And what will lead to the margin expansion, let's not forget, is going to be the correction in the palm oil prices, PFD prices. That is something that will be supporting the EBITDA margin expansions overall. But there's one thing is that the milk inflation has still continued. So the HFD segment, that could see a bit of a subdued demand coming in even this time. Those challenges of milk inflation still continue for the HFD segment is what we're expecting. Let's not forget, summer season, that because of the unseasonal rains and the weather conditions, that is something that we could expect an impact on the summer portfolio, and that is going to be the ice cream products. For that could see a subdued demand over there. While in the home care and the beauty and personal care segment, we could see a moderate growth coming in both these segments as well. Premiumization is a factor that we are keeping an eye out on. In terms of volume growth, we're expecting a 5% volume growth this time coming around, and mainly this time it's more of a volume-led growth that we could see coming in than a pricing-led growth that we've seen over the last year for HUL. Other than that, factors to watch out for. Let's not forget Rohit Java as the new CEO of the company. This is the first time that he will be talking to the press as well in the press conference. What are his comments coming in? That is something to watch out for. Demand outlook, margin outlook, as well as strategy for the HFD segment. What is that over there? Keep an eye out on that. And how is the recovery in the rural segment? That's a factor to watch out for as well.
Okay, Vinny, we'll leave it at that. Still counting down to 20K, hopefully tomorrow, if not today itself. Polycab, that's your big star performer today, 7.5% higher still. HDFC AMC, RBL Bank, Balrampur Chini, Glenmark are all names which are sitting extremely abuzz in trade. ABB, of course, is the one which is really slammed down about almost 6.5% or so. We flagged off earlier as to how ABB, the global holding company, the guidance given from them was a very, very bleak picture, and therefore you're seeing a sentimental rub-off on ABB India as well. Of course, the stock has also recovered from the session lows, but still lying lower by about 6.5% or so. Vinit, anything that's on your buy list right now?
We like LT Foods. We believe that that stock has got significant legs, particularly considering what is happening in Ukraine and Russia. Russia is marginalizing Ukrainian grain coming to the market. That is going to lead to the other staple, which is rice, doing very well. And Pakistan is also compromised with its financial mismanagement. So we believe that the rice stocks will do well. We like LT in this primarily because of four key triggers. One is the export pricing being stable, volumes going up, market share gains from Pakistan. Their domestic market is doing very well. So we are seeing unorganized to organized, it's a 10 lakh crore market. And the organized sector only is at 10% to 12% market share. So this we expect by the end of the 10 years to shift to 90-10, the reverse. So we believe that packaged foods will do very well. And the company has entered into the snacks market with their own variant of rice snacks, which they have tested in the Bangalore and Delhi, doing very well. And we believe that the company can continue to grow top line at around 10-11% with a margin gains about 5-6% to at least 80% higher profits from here. So we target 230 rupees on the stock in the next 18 months.
Colleague Sharad had pointed out LT Foods just last week in his Khabar segment, and since then, of course, the stock has been moving higher, talking about how a lot of HNIs are also looking at buying that. In fact, since we're talking about Khabar, let's go across to Sharad and find out what the Khabar from dealer's room is today, because I think today he has another interesting stock that the dealing room is chatting about.
Well, yes, in focus we are having Gujarat Ambuja exports, and what we are gathering from dealers is that there has been a sustained buying coming from the domestic mutual fund houses in this stock. Now looking at the volumes, that's almost 5 times its daily average, and also the stock itself is above the 200 DMA mark. Even the monthly numbers we checked for the delivery, that is as high as 50%. Now last time this happened was in the month of May, and that time the stock rallied almost 20%. And apart from this, as per the channel checks, it's suggested that the company will be getting a large order in terms of a foreign collaboration coming from Europe. Now looking at the Q1 numbers, it's expected that the numbers are expected to be strong, especially with the adjustments coming in the forex part, which would be aiding the bottom line numbers as well. Now do remember that the international corn prices, they have also corrected by almost 7% over the last 5 trading sessions, and the important thing is the company itself is a corn derivative or a processing company. That means roughly 60 to 70% of the raw material cost is the corn. So this is why this is also a rub-off effect coming on the company as well.
Okay, Gujarat Ambuja Exports, that's the one which is keeping dealing rooms abuzz. Quickly take stock of where the market is at currently and where the index is. 19,985 thereabouts is where we're currently standing at. Pharma, banks, FMCG being your big contributors today. And of course, ITC is one such case in point. Remember, we just flagged off for you a while back, ET Now exclusive sources picking up that they may be looking at an announcement of their hotels demerger, and that could happen ahead of their August end AGM. That's ITC in trade for you, closing in at the highest point of the day, 490 plus on the stock as we speak right now. Vinit, do you still find value on the table for names like ITC? Our sources tell us that perhaps a demerger of the hotels business could be on the cards.
So, this demerger saga has been going on for donkey's years. But that apart, we believe that double-digit growth in the FMCG space, no one can outbeat ITC. None of the other companies, Varun Beverages has its own run. So we believe ITC will keep performing better because foods, as I just recounted to you, is in a good space. Cigarettes are doing well.
Seem to have snapped that line. It's pouring outside, and that might have impacted the lines today as well. But just quickly taking stock of what's happening globally as well, because while we are inching towards that 20,000 mark, we are, a bit alone in that. And I say that because Asian markets actually ended a bit mixed. Nikkei was down over 1%, 1.25%. We also have the pre-market rates coming in from the US, and that is not very supportive. The Dow is pretty much flat right now. Nasdaq is suggesting a cut of almost 140 points. So as compared to that, Indian markets are doing all right. Though European markets are doing okay for now. You have the German DAX, which is up around 0.5%. FTSE is doing all right, and French CAC 2 is sitting with a gain of around 0.3%. And that should be something which is supporting our markets as well. But time now to get the BTSC ideas out of the way. Naresh, what's the BTSC idea?
So first would be a buy on Grasim, broken out about 1800, looking at some follow-up move over the next few sessions. Stop loss at 1790, target price of 1880. Second is a buy on GAIL India, defensive bet, trying to cross that 111 to 113 mark for the last many months. Came close to it even today. Stop loss at 109 and a target price of 150.
What about you, Kunal?
So there'll be a buy on Axis Bank first, expecting the stock as well to come back to that 1000 plus mark. So 1010 is the target for Axis Bank, stop loss at 960. And Sun Pharma is the second stock which I would recommend as a buy. Again, classical breakout about that 1100 mark on the spot as well as in the futures today. 1130 as a target, stop loss at 1082.
Okay, while we're counting down to 20K and it's a busy evening ahead of us as well, we're awaiting two big boy numbers, that's Unilever as well as Infosys and a plethora of other mid-cap earnings as well. But Anisha, lots on our plate tomorrow as well. Walk us through what are the cues to look out for?
Well, I think first up, of course, it will be the earnings reaction. So HUL as well as Infosys, we'll see the reaction come by tomorrow. A lot of other mid-cap IT companies as well to watch out for. So, of course, Persistent, Emphasis, Coforge and the likes will come out with its earnings later today. So, all of that will react tomorrow. But tomorrow itself is going to be a very busy day for earnings. Look at that. Reliance Industries comes out with its earnings. HDFC Standard Life, Ultratech Cement, JSW Steel, Vedanta. Lots of earnings lined up for us tomorrow as well. So, it's going to be a busy, busy Friday. Yes, you might be thinking about going to Oppenheimer or Barbie, but that's not the case because we have a whole host of these earnings to track tomorrow as well. And Reliance Industries, as always, will make us wait till late. 7, 8, 9 p.m. We don't know when exactly the numbers will be out. But interestingly, Paytm too will report its numbers tomorrow. Separately, you have a lot of corporate action lined up. Federal Bank, wherein they are going to mull the fundraise tomorrow. RT Drugs is going to decide and consider a buyback as well. GNA Axle, wherein there could be a bonus announcement coming tomorrow. So we'll watch out for that. And of course, as we were discussing, it's going to be Oppenheimer versus Barbie tomorrow. Are you guys going for either?
Oppenheimer for sure.
Yeah.
I would want to.
But have you booked the tickets? Because nothing is available.
We'll figure it
Thought
out.
as much. What about you?
We'll figure it out.
But Barbie, because of the kids, or you're going for Oppenheimer?
Oppenheimer.
Oh, so clearly it's a
Saturday or
3-0 for Oppenheimer. I don't think we'll get the tickets. At least I will not get the tickets where I want to watch it. But nonetheless, let's see what happens. But for now, what is underway is a good party as far as the market is concerned. And it's quite a treat to watch this one as well, because it's been a solid rally from that 19,000 to 20,000, managed to scale it or almost scale it within 15 days itself. 20 points away, but it's not happening in a jiffy. That 20 points is taking us a lot of time to really, materialize. But Vineet, before I let you go, talk to us about what are the other internals that you're watching out for in the markets right now, because the mid caps have been doing all right. There's been a lot of pockets like capital goods, etc. But today, when we heard the commentary come by for the ABB Global Major, we suddenly saw the likes of ABB and Siemens tanking quite a bit. Do you think these companies are just looking for reasons to correct now, given the sharp run-up?
I've been privy to information that a lot of business from Siemens and ABBs of the world is coming to their Indian subsidiaries, which are not listed, right? And these global companies are suffering. So we are seeing that drag these stocks down because they've already run up very quickly, very fast over the last few months. But I don't think that the same thing will play out with the domestic stocks, the domestic listed stories in the same space. And we remain buyers out there.
For ABB, the ABB group earnings, they've handed out a mixed guidance on the sidelines of that, stating that in the third quarter, they anticipate a low double-digit comparable revenue growth. And for the calendar year 23, they anticipate a comparable revenue growth to be at least 10%. Expect operational EBITDA margin to be above 16%, however, and they are saying that the order growth is going to get impacted because of the high base too. Orders in Asia, Middle East and Africa have seen a decline by about 3%, though up 5% on a comparable basis, and that the decline was more than offset by strength in markets such as India. But overall for the group, yes, they do see a low double-digit comparable revenue growth for the next particular quarter. So that's why I guess ABB is also seeing that little bit of pressure. How is it that we're shutting shop for the day though? Still aloof from that 20K mark, but yeah, optically almost in any case there. Kunal, you were making the point as to how the underperformers are making a comeback. Kotak Bank then, the rank underperformer from within the banking space, is that the stock to bet on in the near term?
Well, it seems like, because I think after quite some time it's showing all those classical signs of breakout, price appreciation, patterns being completed on the bullish side for Kotak Bank. It's still yet to confirm a big breakout about that major resistance, which is around the 2000 mark for the stock price. But then eventually I think the stock should scale past about that level. So I believe in this leg of uptrend, it's found its mojo back. The retracement in the last 2-3 weeks for Kotak Bank was very minimal as compared to the previous retracements, where the stock had actually corrected more than 70-80%. So I think that aspect, there's a very strong chance that it should also be one of the few large cap names, banking stocks, which can make a new high.
Okay, we begin winding up for the day. So no, we've not closed at that 20K peak, but yeah, 19,968 within short distance of that 20K mark. Kotak, ITC, Dr. Reddy's, ICICI Bank, Maruti, Bharti, and then of course SBI along with Axis. But the big story today has also been the Reliance demerger, the Jio Financials demerger that is, and Reliance as well. The adjusted value holds higher by nearly about 2% at 26.24, and this is sans of the Jio Financial business. The broader markets as well have held out quite smartly. So Glenmark, RBL Bank, Polycab, these are all names which have managed a good move for themselves. But lots to happen from now up until when we come back for trade tomorrow morning. A lot of earnings as well that the market needs to be digesting. So we'll pick up all the action tomorrow morning at 8 a.m.